Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Gené Teare. She's a senior data editor at Crunchbase to discuss Crunchbase's third quarter global venture funding report, which shows the sectors that raised the largest funding rounds and some other trends. It's great to have you with us, Gené. Welcome to Trade Talks.
Great to be here. Thanks for having me, Jill.
All right, you got it. Let's talk about some of the higher level findings from the funding report. How did global venture funding in the third quarter play out?
Yeah, so what's interesting is it was a little bit up quarter over quarter. It was around 73 billion, but down year over year. And I think the significance of this report was we're 5 to 6 quarters into the downturn. So Q3 in 2022 was already quite significantly down. And what we saw this past quarter is that it was really the fundings at the seed and earlier stages which were down the most. And what that tells me is that investors are still incredibly cautious, are quite worried about what they're seeing out there in the marketplace, and are still holding back even more than they did from a year ago.
And Gené, in what verticals are you seeing the largest funding rounds?
Yeah, what was interesting is we did see late stage come up in the last quarter. And when you looked at where that was happening, it wasn't happening in the US markets. Even though the US markets were kind of flat around late stage, it was happening more in China and in Europe. And in China, that was a lot to do with investments in electric vehicles, in the semiconductor industry, because we know China is looking to be more independent in that sector, and also battery tech. And then when you look at Europe, the larger rounds were also in climate tech, battery, some manufacturing. So those larger rounds were really strategic investments, often not from the venture folks, into these industries which require large dollar amounts to invest in those industries, and those are growing industries. So the late stage being up is not really an indicator of the health of the venture ecosystem. And as I said, the fact that there is even more pullback at the seed and earlier stages, that's the bread and butter of the industry. When the industry is investing in those stages, they're looking to exit 7 to 10 years out. And so what that tells you is the market is very tamped down at this point.
Mm-hmm. What about AI funding specifically?
AI was up. AI, I think what's interesting about AI is I think the venture industry would be down even more if it wasn't for AI fundings. So we are seeing very large rounds go into AI companies. Databricks, I think, raised at an even higher valuation to its last round. It raised 500 million at a 43 billion valuation. That was the highest valued funding in this past quarter. Anthropic raised a huge amount from Amazon. And so we are seeing very large rounds go into AI, but it's not really shifting the overall focus, the downward focus in the overall venture industry. And I think that's because, yes, there are these companies that stand out in AI, but a lot of funding has gone into AI in the last 5 years, in the last decade. And so it's not all concentrated now. When we saw an increase in Web3 in 2021 and into 2022, but in that industry, it was all new companies. In AI, this is a sector that's been invested in over the last decade.
Right. And many of 2021's IPOs have flopped, right? So what does this mean for 2023? And you start to look forward to 2024.
On the IPO front, I think what's interesting is we had in September, 3 very large companies that went public. We had ARM, we had CART, which is in the top $10 billion list, and we had Klaviyo in the 100 top companies on our unicorn board. We track these high value companies who are private, and there's almost 1,400 still on the board today who have yet to go public. And I think how these 3 IPOs performed, it's interesting is, there was a lot of interest in those IPOs. There was an investor pop, but when you look at the values today, they're down from their IPO value, not massively. I think CART a little bit more than Klaviyo and ARM. And so what that tells you again is that there is still a lot of caution in the industry. And I think what we will see is we will see more companies list coming into 2024. I don't think there's going to be a deluge, but I do think there are companies who in the last 18 months have cleaned up their balance sheets, are profitable, and are still growing. And those are the companies that are going to look to go public.
Well, Gené, don't you think the valuation reset over the past 18 months was a good thing? It was a healthy thing. To your point, balance sheets are clean, they're profitable, they're running their businesses in a much more efficient manner. And by the time it gets to the public markets, it's better for the public investor. At least they have the opportunity to participate at appropriate valuation levels. It almost seems like this valuation reset was a healthy thing versus just growth at any costs and having a good story to tell.
Absolutely. I think that money was flung in 2021. We saw venture double. It was north of 600 billion. And at every single stage, venture went up, at the seed stage, at the early stage, at the late stage. And that's because investors were saying, we can invest in this now. And within 6 to 9 months, they'll raise the next round at even higher value, and then again at a higher value. And so everything was let loose, and companies were told, grow revenue at any cost. If you add $1 in revenue, that adds $20 to your value as a company. And that was unsustainable. And we've seen that massive pullback. I think it's a much more realistic market. Companies need to be or show a path to profitability if they're going to go public. And I think that's been, a much healthier discipline has come into the industry. And we're seeing that on the private side, and we're seeing that on the public side.
All right, Gené, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks for having me.